All right, family, welcome to a big webinar here, guys. Really wanted to take, time to completely break down our system and all the core concepts. So it's going to be a really big video, family, good for everyone that's already been in here as a great refresher. And then for all the new people team, this is really what you want to wrap your head around and understand how to apply all of our core concepts. So core concepts, guys, of our system. Right, I'm just going to touch on them all gently and then really show how to tie everything together to create a good trading plan and a good trading business. Every good trader has a plan, guys, right? We've all heard the term, you have to build a business. This is the same thing in trading, right? You need a system, you need something that you can run stocks through to figure out how to trade them, what you should be trading. Other than that, guys, you are just gambling. So, core concepts of our system. First and foremost, and again, none of these guys are in order of importance. Every single one of these is important. You can't skip anything here. So reversion, right? Reversion to the mean and away from the mean. We use 21 EMA, 15 EMA, point of control, and Keltner channels. Zones and key levels, right? You got to build your trading roadmap. You got to know what levels to execute off, why they're key levels, what you're expecting if and when these things break. Right, you guys see my zones, it builds a complete roadmap, which then allows us to do if this, then that, right? And that's how you know when to trade and why you should be trading it. The squeeze, right? We all need playbook setups, team. As we build out all of these core concepts, you need to have a setup to attack all these things. So the squeeze is just one playbook setup, team, we're gonna cover, and it really just ties into our entire system here. Executing, right? When we execute, team, there's a few things we need to focus on, ATR, strike selection, tape reading, targets, etc. We're going to cover that. Our little cloud, our secret weapon, Ichimoku, we use for gauging trend, always important, intraday, big term, etc. And daily prep, family, right? All of this is useless if you don't prep, right? So not only with a great system, do you need a great plan to execute preparation. Trading, guys, is 90% preparation, 10% executing. Right? The harder you prep, the easier trading becomes. So you got to know how to prep, and you got to know, again, what system to run through when you prep. So those are the core concepts here, family, I'm going to cover. Let's dig right in. First one we're going to cover here is reversions, right? So again, team, I'm going to cover all of these and then talk about how to tie them all together to create an elite trading system. So all right, let's clean this up here. All right, team, so reversion to the mean. First thing we're going to start with is the 15 MA and the 21 EMA as part of our system here. So as we know, let me just get rid of this. All right, we're just going to focus on the 15 and the 21. So a very important thing, guys, in trading is understanding how and why stocks are moving. Right, we're surfers. We want to know why these waves are doing what they're doing and where they're, typically are going. Obviously, no one knows where stocks are going to go at any given point, but we have a sense, because using these things, how the market ebbs and flows. Stocks, guys, do one of two things. One, they revert away from the mean, or they come back to the mean. It's as simple as that. That's all stocks do at its base level here. So what is the mean, right? Technically, we use the 21-day moving average, exponential, and we also use a 15 simple moving average. The mean, guys, is technically just the average price. And what these stocks do is they always go back and forth to that price. You can uptrend and uptrend, but you're always going to get that pullback to the mean to reset. Anytime, guys, you get that pullback to the mean, that's very healthy, and that's where we can kind of see, is the trend going to hold here? So for example, right? ES, right? Just our market here, team. Pull up our trusty tool here. We explode through the mean, right? Nice little run here. Nothing wrong with the market, team. We just need to revert, right? It's only healthy, guys. Stocks can't just keep going up. They need to come back to the mean, recharge, find some energy, and then explode away from the mean. So again, they're only doing two things here, family. Pushing away or reverting back. It's as simple as that. So as you can see here, guys, right, market pushes very, very hard and then reverts right back to the mean. At the mean, what comes next, team? It reverts away, comes back after a huge explosion, finds its feet, finds more energy, right? Like all good stocks, guys. You see the little drawings. They go up, they go down, they go up, they go down. This is what they're going down to, and this is what they're coming off of. So let me just take that off for a second. Right, guys, we push up, we revert right back to the mean. And again, we need this to happen. Doesn't mean it's a bear market. It's a simple reversion from more. And then boom, we revert higher. As you'll see, team, if a stock is trending, the mean is also going to trend. So it's not something that stays below and we're always going to come back down to 3,000. Right? As you can see, guys, we trend with it. Right here, the mean was a little shorter. I mean, it was right here. We pushed higher, team. We reverted. Look how much higher we are. Right? So again, it doesn't matter how hard you keep pushing, you're going to continue to revert back to the mean when you get a little too extended. It's very, very healthy. How can we use this, team? Always gauge where is a stock, where is the market, right? You got to always watch both. You can't just say, okay, Apple's here, but the whole market might be super extended and needs to come back to the mean. So you want to apply that, team, into your preparation. Further away you are from the mean, the riskier longs get, right? You should start to switch towards reversion trades. When we're near the mean, it's time to load up as long as the trend holds, right? So we explode away. The further we get, team, every single day, you need to keep it top of mind, just like we did this week, like we've been talking about, family. Huge run here, way too extended. Since we're day traders, right, we can attack a day-to-day basis the upside. However, again, we understand we are very extended and at some point are going to revert to the mean. The further we get, the riskier it gets. So we got this last push here, team, and as we know, reverted right to the mean. Even through it, recovered it, and now we're starting here right again, getting picked up at the mean. So again, guys, just look at a few more examples. Back to here, we'll just start from here. All right, guys, explode, revert. Explode, revert, explode, revert, explode, little reversion, and then a huge push. Again, we can play this every day just knowing it has to revert at some point. Starts to show weakness, complete reversion. What you'll notice in trading, team, is we climb, and we revert back very fast, right? The old saying, stairs up, elevator down. We often retrace in 1 to 2 days and can trend for as long as possible, right? We trend, boom, revert in 1 to 2 days, right? We find our feet, we push, little reversion, can't really get going here. Again, we push, we revert right to the 15, we do it again, right? And we just lived through this example, team. This was great. Depending when you're watching this, you'll remember this example. Just getting way too far, we need a reversion, right? We're not asking for a bear market. We're not calling the top here. We're asking for something that's very healthy, and that's going to reset stocks, which then resets our opportunity. So, right, that's simply, guys, how you use the 21 EMA and the 15 MA. You always want to be on the daily chart because that's what we're looking for. That's where we're pulling data. And again, Chandler, how do I use these? Every morning, guys, you need to take in this data. Where is your stock? Where is the market, right? Up here, team, right? Every morning you see this. Again, we're going to tie this into preparation, but sticking to this right now. Got to know where you are. If you're extended, you need to be having some reversion to the mean setups ready to fire. You need to know where could this thing start to drop if it starts to drop. Just like here, team, when we started to roll the fuck over, we knew where it was going, right? If you don't know about these things, which every time it falls, it goes to it, this is huge edge. And again, how do we apply this? Ask yourself every morning, where are we? This coming week, team, we're at the mean. So we're looking for accumulation. We can start to trend for the next 2 weeks. That's important, as opposed to up here where, yeah, we're crushing it, we're taking swing trades. All right, team, let's start to get cautious. All right, a big gap and go. All right, this looks way too exhausted, right? Don't put on any exposure, swinging especially. If it keeps going higher, great, we'll attack it. But we know back of mind, we need to fucking retrace, man. We wake up, we get that sign, we immediately switch to our mean reversions, right? You're not lost, you understand what's happening. So hope that makes sense, family, right? Away from it, look for the retracement. When you get to the retracement, let it find its feet, and they're going to start to pick it up again until it comes back, reset, on delay, reset. Let's see where we go. So that's 1 point, team, of our reversion system. And again, stocks only do one or two things. They revert to the mean or they explode off of the mean. I'm going to be very repetitive in this video, team, because I want to just drill these concepts into everybody. So those are two amazing tools that you can use for mean reversion. Another incredible tool, which you can use a bit more here, as we know, is point of control. So we have trainings on these things, team, so I'm not going to cover them in depth, but again, going to talk about how to tie them together. So we know this, right? We can mark these charts. You guys see me. I always add the little zone, right? So I know, okay, that's our little reversion zone. When we're all the way up here, I know we can start to tank towards this zone. And that's exactly what happened, guys, right? We crushed it right to it. Insane. Again, we bumped through it, boom, right all the way back. Crazy, crazy. So knowing that as well, team, we add our second tool of reversion. One of my favorites, one of my strongest, point of control. Again, go watch the video. It's in the training. But how do we tie this together? We always want to know, team, where point of control is. Because again, a stock is either going to push to it or push back down towards it. You guys know I say point of control is a magnet first and then a cannon, just like anything, right? Huge magnet, and then we can see a cannon again, just like POC. So sticking with recent examples, how did we use point of control? We used point of control this new month to understand that liquidity was way, way below. There was a huge magnet representing the entire last month as we're coming into a new month. So we're getting our data built. It's not that reliant. So not only do we know we're extended, that's check one. Second, we know one of our biggest reversion tools is right down below. What's even better, team, and this is how we stack edge, we have an old point of control down below, just from that prior month. We ran away, the magnet did not move, right? You'll learn this in the point of control video. They can move, but if they don't move, you're bound to go back, family. So again, we were on top of this drop because we knew point of control was below. We knew the reversion was below. We knew we were due for that pullback, right? Bull market is still intact, team. These are just healthy things. Whenever you run too far, right? Stairs up. Look how many days, guys. So many days. And we reverted again in 2 days. They like to grind and make money for a long time, guys. Then they reset this shit in a day or two. And then they go back to the long grind making money. So that's how the market ebbs and flows. And these are 2 points where we understand reversion can take place. So just like the moving averages, guys, if you're away from it, you can fall towards it. When you get to it, you can push off of it, just like we did. Huge drop, found our feet, explode off point of control, came all the way back here, exploded off point of control, back to our mean. And now we'll probably start to trend back up, family. So again, watch point of control, guys, to truly understand it, but that is how we tie into the system. Just like your moving averages, you always want to know where is point of control. What is point of control telling you? That's where they're in control. That's where bulls and bears are in control. That's where all the liquidity is. That's where they're going to drive stocks. It's just simple as that. To these points, family. Knowing these points literally is the secret and key to trading. You got to know first what's going on, why they're doing this, and then where is it going to take place. Huge drop, boom, we fucking nailed it. Next drop right to POC, nailed it, and now we're back at the magnet, and we see where we go from here. So that's point of control, team. Again, tying into our system, always want to know, are we away from POC? Are we at POC? Right? If we consolidate at POC, we can expect an explosion, guys, one way or another. And that's going to lead us into the squeeze, et cetera, et cetera. All this just builds on itself. So the last section here, guys, of reversion is our Keltner channels. So let's take a look at Keltner channels. So Keltner channels, guys, in a very simple to describe term, is the 21 EMA in the middle, the white line, which we already covered, and then it's giving us extensions of ATR. Orange is 1 ATR above and below. Blue is 2 ATR above and below. Yellow is 3 ATR above and below. how we can use these, team, is to read how extended are we. Whenever we reach a third extension, which oftentimes we don't really do, right? We revert to the mean, we push, right? We hit that second extension and we pull back, right? We reload, we hit that a second extension, and we trend for a while. We ended up hitting the 15 MA, which is also why we use it. And then we explode here. And as you can see, for the first time in a while, guys, we got to that third extension. If you're around recently, you know I've been screaming, we can't chill at the third extension. Not good. Something's bound to happen. So this is a way, team, to really read the aggressiveness of the extension and to let you know, okay, now it's time for this thing to really roll over. Right, so we can easily, do these little reversions. We push it off right to 1 ATR, 2 ATR, come back, et cetera, et cetera. But whenever we reach that third extension, team, for any name and any stock, it's really time for a pullback, right? So we've been coasting on it day by day, knowing that's not healthy, right? Again, we can play the upside, but we need to understand what's going on here. And as soon as we push just way too out of it, team, they do it, drop us right back and resettle us. And literally, futures open right now, starting to push off that mean again. Right, so we can head back up to 1 ATR, 2 ATR. If we get to 3, team, it's over. Last time we reached 3 ATR was over here. And we pulled back in a day, guys, right? You hit that third extension, it's game over. This is usually what happens right here, right? Revert to the mean, you push, 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 you make it back, you push again, hit that second extension, push back, first extension, back, first extension, goes runner, runner, way too far, right back down. So only use this on a daily chart, team. And again, how do we wrap this into our system? One, where can we revert to? We can revert to the 21 EMA and the 15 MA. So where are we in proportion, right? Over here, guys, we understand we're very susceptible to dropping. Great. Where's point of control? Down below as well. So we can revert towards this zone, right? All of it right here. We're up here. Everything we need to touch is down here. That's our target, right? We understand if things start to roll, where they're headed and why. Got to understand both. Again, 21 EMA, 15 MA, point of control, and then tying it together here, family, is the extensions. It just gives you an extra little reading of where we are in proportion to the map. Up here, guys, right, you can expect a push, right? If we wake up, right here and we push to 1 ATR, that's fine. We can keep pushing. But if we're at third ATR, team, get ready. Have that set up, bullet in the chamber, ready to go when you get the signal. So that's our reversion part of the system, family. Again, so important. Stocks only do one of two things: revert or push off of the mean. Simple as that, team. Very core concept here. So hope you enjoyed that. Let's keep moving here, guys, to zones and key levels. So all of these reversion tools are key levels and they're zones. If you haven't already, team, please go watch the zone to zone video on, the true logic behind it, how to build them, etc. Just touching on here briefly. So again, part of zones, guys, are reversion zones using all of these things. Simple as that. So you can build those into your key levels and into your zones. And then, as you guys know, family, I like to trade very big, important key levels. You can't just trade in the middle of crap. We're breakout traders. We're small fish in this game. We need big money to come in and push shit higher or lower. And they only do that, guys, at very big key levels, right? Most of the time we chop around until we reach a key level. And then we either get fucking stuffed and revert back to the mean, or we break out and keep going. So not going to touch on this one too much, family, because there's a whole zone video, but tying everything together, right? We're retracing down to key levels, right? Quick example here was our prior all-time high from COVID, right? I actually just go market here. This is one example, guys, of a very big key level, right? We had yet to reach it. We had yet to break it. As you know, we finally broke it here and did not retest it. So how do we know? How do we apply this to the system? Right? That's part of our zones. That's part of our key levels. In this case, tying everything else together, All right, we're way too extended. Point of control is down below. We're at third ATR. We have a big key level down below. We have big retracement zones. We can go test those key levels, team. We go right to it, and now we're holding it. So, got to play off big key levels, team. And again, go watch that video, please, to understand how and why to find key levels. But you tie those key levels with these reversion tools to simply build your trading roadmap, right? Very big key levels here, team, for example, can just be, that low of day. As soon as we break that low of day, right at 10:30, that's a huge flush right down to our reversion zone. So again, guys, the core, essence of building zones and key levels is to structure that roadmap that allows you to say, if this, then that, which ties everything with it. If we break low of day, we can see our reversion zone because we're extended on the Keltners, point of controls below, all that's below, and we're breaking a key zone, right? Tie all that together, team, and you'll take great trades. You can't just trade nonsense. You got to trade when it's at what I call inflection points because it brings the big boys, right? Obviously, it's an extreme example, but once we break that key level, team, right, there's people that held it there yesterday. As soon as we break it, it's over. So you want to take all these trades, guys, off of these trigger levels, understanding where it can go. So this leads us into our next section, which kind of builds on this, right? You have your key levels, you have all that fun stuff, you know where it can retrace. When should we be trading something? So again, guys, stocks, they don't move much. Most of the time they chop around and then they revert or they push away. What gives us a huge edge as day traders is the squeeze, right? We need that volatility. We need that tightness. We need that breakout type move, whether it's down or whether it's below. As we all know, the squeeze helps us see that shit, helps us visualize it, and helps us understand the times we should be playing a stock. So let's take a look at the squeeze here, team, and how to tie it in with everything else. So as you know, and as you see, if you've been in the group, we run scans every single morning. We want to know what's squeezing, what time frames, etc., etc. The bigger the time frame, the bigger the move, right? The more we can capitalize, the more zones we're going to clear, the quicker we're going to revert, right? So it's our diligence team to understand your focus list and understand who is squeezing, because when you're reverting and you're at key levels, you want a reason to play it, because we can just chop on point of control, on 21 EMA. But when you tie that together, guys, with something that's going to catch volatility and tell you when to stay out and when to get in, that's when you're going to take good trades. So again, the squeeze team, you always want to understand where your stocks are, where they could go, what's going to be the triggers, and then you want to know who's squeezing, what time frame, and how can we utilize this information. So let's look at some examples here, team. All right, the market. All right, guys, so let's see. Let's just find an example. Perfect. Here we go. We top out, right? Thursday, we come into the day with a beautiful 30-minute squeeze here, team. We have a key level below as a trigger, and we have our reversion targets down below. So again, prep. This is all leading to our last point here, team. I understand the market's extended because I looked at the Keltner channels. I understand we've been running way too hard and need to retrace because that's how stocks move. I understand where it can head to if I get that signal. I understand what key level is going to facilitate this move. What key level is going to bring out the people that are actually have an interest in driving it to these points. In this example, we're just going to use the low a day from the prior day. Very simple. Right, guys, so I have all of that, right? Tying the system together. I have 2 points checked off, building my war plan here, as I like to say. Next, I'm going to look for a reason to attack. Right, guys, we can chop on this key level. So it doesn't matter if you know the Keltners are below, if you know all that shit's below, if you know the trigger level. We need the bears and the bulls to come out, explode, release volatility, and give us an above average move. So again, leading on this example team, we have ES, we're extended, we have our key level, and now we're looking for a reason to play it. In this case, a squeeze. Squeeze, guys, hands down, the best setup. As simple as that, so it's the only one I'm going to cover here. All right, so we checked off these boxes for this setup. Next, we found a squeeze. Fuck yeah, it's on. 30-minute squeeze, guys, right? Starts to release early. Okay, awesome. We're using this downward pressure. We're using this, right? Tight, 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 tight. We start to release, team. We release early pre-market, knowing, okay, we're coming out of a squeeze. If we break our key level, if the squeeze continues to release, if the market rolls over, again, if we break, where can we go? Simple as that, family, right? It's if this, then that. So if we're extended, if retracements are below, if we break a key level, if the squeeze fires, we're going to take a trade. So boom, you're initiated, guys, 30 minutes into the open, and you crushed a huge trade right down to where you should have, right? 3 o'clock, day is over. You nailed it by taking all these core concepts and tying them together. So I'm not going to make a video here on the squeeze team. We all know how to play it. I'm going to be making a video just kind of touching up on it, but find any squeeze and understand the power of them. Right, guys? If this was an hourly squeeze, it's the same shit. You can expect a bigger move. Where to? See how far we can get, right? Let's see. So that's that team, right? Whatever your playbook is, we all have different trades. I know some people, they sell puts. So for them, they sell. We're extended. Reversions below. We're starting to top out. There's a lot of put flow. I'm going to sell calls. When we reach here, I'm going to sell puts. With this big 4-hour squeeze, once it starts to break, I'm going to sell puts expecting a push off. Whatever your setup is, team, play that, tying everything together here. Moving on. How do we tie together this plan and execute? So continue on this example, team, right? ATR, average true range. We need to understand what's realistic, right? If the 21 EMA is 400 points below, yeah, we need to retrace, but it sure as fuck isn't going to happen in one day. ATR ties together with everything, giving us a sense of what's possible, right? Can we even reach reversion today? Can we start the process of reaching reversion? Can we clear one zone? Can we clear 2 zones? We might hold a zone. What's possible, right? Our next trigger level might not be until a full ATR away. This information, guys, is super, super critical because it sets your expectations and it gives you targets, right? And it helps you build a realistic trading plan. If I expect Apple to drop 30 points today and you don't know what ATR is, that's just so unrealistic. Can it drop 30 points? Yes, right? Can it rain cats and dogs? Sure, anything's possible. But that's not how you build a trading system, team, right? You buy puts this day 30 points below because, the retracement's 30 points below, but Apple, generally can't even do that unless something truly goes wrong, which again, we're building a system here that we can apply daily off daily core principles that will always work, such as ATR. So you want to take this information, team, and simply just apply it to your game plan, right? How far is my zone? Your zone might be an ATR away. So if we break a trigger level, it's safe to assume, we could drop 23 points on NVIDIA to the next key zone. Maybe the zone's only 10 points away. Great. We could break through it and start the journey to the next. So let's look at this example here, team, right? This is a bit extreme, but 56-point ATR for the market here, guys, right? Coming into today, we'll just take ATR from here. We can expect at least 56 points. Now, again, this is very extreme because they dropped us incredibly above average. Sometimes, guys, if it's a big move, it's going to go double ATR. So in this case, team, we can expect at least 100 points. 100 points gets us down to our zone, right? I don't expect to drop 200 points, but 2 ATR, that can happen on an above average day. It's just average, team. Sometimes you have a less than average day. Sometimes you have a big above average day. So here's a streaming example of, we can drop 100 points. Also knowing if they truly revert, they take this, elevator down, which is a lot faster. So there's a little example, guys, of tying our zones, tying everything together here. We have our reversions below. We know where it can head. We know we're extended based on Keltners. We have our zones. We have our map. We have our triggers. And then we have our playbook setup, the squeeze, right? Squeeze fires, we're extended. We need to retrace. Next stop is executing this trade. I need to know, can ATR get me there? Again, this extreme example, guys, we'll look at another one if needed, but we can expect at least 60 points here an average day, 120 on a normal day. Retracement is 100 points below. Okay, if this shit really dumps, we got a chance to get there, right? So have all this covered, team. That's how you use ATR. We're gonna switch off the market here, guys, to continue strike selection here, but I'll actually just cover it because I want to stick with this. So obviously, guys, we need to know what to play and why to play it. As you know, we study options volume on the chain to see where does big money want this thing. So I'm going to switch to another quick example here, team, of NVIDIA. Right, NVIDIA last week, right, was getting loaded with calls. Right, let's pull up some shit here. Going to pull up last week's chains just to prove. Right, so NVIDIA started last week, team, at, right, 530-ish. Long way below. Give me 1 second while this pulls up. So Friday night, Sunday night, we're doing prep. We're seeing what they hit on Friday. Biggest strike here, guys, was 550. Right? All this is an options chain with an option to see volume. Why is this important, family? Big money is so big, they leave clues. Right? John Carter said it best. It's like a fucking elephant walking through the forest. Guess what? They're gonna knock down trees. They're going to leave huge footprints. They're going to leave huge piles of shit. You cannot miss these things. That's why they're whales. So again, big money leaves clues. They have to play the game, and we happen to be playing the same exact game. So if you know what you're looking for, you know what big money might do. So back to the options chain. Big money leaves clues of where they want shit. 12,000 here, guys. They loaded these suckers at $6, right? A lot of volume. They ain't load the 540s. They ain't load the 535s. They loaded the 550s. Telling me, all right, this week, if NVIDIA is strong, right? If NVIDIA, pushes off POC, if it breaks its squeezes, if it makes its ATR, I have a sense of where they might want this thing. Again, guys, we might be 3 ATRs away from 550. But over the course of a day, a course of a week, you want to save these chains to see what they continue to hit until these targets are taken out. As you'll see on the video, guys, last week was fucking epic. So again, this was Sunday night coming into the week. We knew 550 was generally a target. Not only is it a target, guys, it's the strike that we probably want to be playing because that's where all the liquidity is. That's where big money is. Depending on the name, team, sometimes it's a little too cheap. Depending on the move, you don't want to play it. But on a case like NVIDIA where 550 is realistic, it's $6. That's the contract I personally like to play. So not only does it give me a target here through strength selection, it gives me a strike to play. Simple as that. So let's see what happened here, guys. Again, NVIDIA on Monday, starts this little journey here almost to 550. That day, what'd they do? Let's pull it up here. They loaded even more 550s. Right, we got a little closer here, team. They're not really getting rewarded yet. They bought them at $6. They're up $1 here almost with this, crappy spread. But end of day, there was almost 20,000 more contracts added. Right, we're getting closer and closer to the reward of getting it there. Big money loads, and then they go in equity and they drive that shit where they want it, and then they win because they have so much leverage. So again, 550 is still a target for me. and that's still the strike I'll be playing. Next day, team, right? We come to the morning. This is perfect. We come into the morning, right? We have a nice little squeeze here. It's a quick little squeeze pro. Let's see. Yeah, we'll just stick with the 30-minute squeeze for now. My bad, team. Where was that? Right here. All right, guys, so we come into the morning with a squeeze, and we come into the morning with a trigger. Again, pull up a trusty notepad here. I have a playbook set up. I have a key level in zone, right? This didn't matter, but I understood what was happening. We can run. I don't have to worry about this thing reverting as long as it does if this and that, right? If it doesn't break, guys, well then I'm not touching it, and could easily revert if these things are below. But we were trading nicely, right? We had a playbook set up. We identified what strikes are getting hit, which gives us targets and a strike to play. So we're coming into today with all this prep, and now it's at ATR. On average, NVIDIA can move about 23 points. So from prior close here, 23 points, right, guys, gets us towards 556. So great, I have a squeeze. I have a trigger level of 543. ATR makes sense. Strike selection, I know what I'm going to play. I am prepared and I know why. They wanted at 550. So if I can get the 550s when my move is unfolding, I can ride that wave with the whales to their destination. Okay? What happened? We open, we break, and we destroy 550. Destroy it, guys. Right to it, right to our zone, right to ATR to end the trade. A++, right? And look, this day, the next day, Tuesday, let's see what happened on the NVIDIA chain. All right, guys, the 550s went to $11. And again, they were probably higher here once the move happened. Ivy took its toll, and at end of day, they were still $11, team. And there's still 20,000 volume done that day. So remember, Sunday night, they were $6 with huge volume, 20 points OTM, 30 points OTM. Next day, they got closer, and there was still a ton of volume. Guess what? Next day, we open with a squeeze and a key level and an ETR that makes sense and a strike that is clearly the target. And then boom, guys, you double your money. Life-changing shit, all by just tying our core concepts together, right? Boom, boom, boom. We have a squeeze, A+ playbook trade. We have a key zone, breakout level. That's where the inflection point is. I have an ETR that's realistic, right? I don't expect this thing to run to 580 today. That's stupid. Can it happen? Anything's possible, but we're building trading plans off things we can consistently repeat. So there's an amazing example, guys, right, of tying together a few core concepts here, right? I have my roadmap. I have my trigger level. I have my playbook set up. I have a realistic target. I know what I'm going to trade and why I'm going to trade it. And this leads us into our last part of execution, which is tape reading. Right? We have a video on tape reading, so go watch it. But after I've done all this preparation and I know where it's going, I know what I'm going to play, I know what I'm going to expect, why I'm doing this, when it comes time to execute, team, we want to read the tape, right? So working on this example, 543. Let's just use a 1-minute chart. We'll go way back. Boom, boom, boom. Right, team? So we open, nothing to do, waiting on squeeze to release. As we near this point, team, it's time to start tape reading. Why? Because we're like fishermen. We understand what we're looking for. So we need to make sure that it's actually there, right? If you're looking for whales and you're in an ocean where there's no whales, I don't care how hard you look, they're not going to show up. If you're looking and you're ready, you will never get baited. So again, go watch the tape video here, team. But I have my trading plan. I have my trigger level. I have my target. I know the strike I'm going to play. I'm coming in completely prepared. Trading unfolds, right? I have a few minutes. Okay, NVIDIA's holding up here, right? You're keeping an eye on your A+ setups. All right, it's starting to approach here. All right, it's breaking high a day. It's time to get ready to get the fuck in if you're not already. Once we get here, team, it's time to read the tape. We'll just assume there was some levels, some sellers at 543. Well, we immediately destroyed them, retested, held, and then went on delay. Inevitable pullback and didn't even test it, team. Goodbye. Right to 550, where there was clear sellers on the tape, which stuffed and then continued its journey to ATR if you want to leave runners. So again, not going to do tape reading your family. There's a video on how to do it, but tying it into our system, this is where you want to make sure we're actually getting through. You want to make sure there's not a 50 million sell order that your ass doesn't see and you get in and it gets fucking stuffed and it starts to retrace to the mean while you have calls, right? So we have everything. We have our zones, we have our setup, we have our ATR down, our strike selection, and now it's time to read the tape to fully execute. So that's how you tie, guys, all this execution into your playbook setups, into your roadmap, into your reversions. Get towards the end of the list here, family. Right, another thing we can apply to names is the daily cloud, the Ichimoku cloud. So again, there's trainings, guys, on these things in Discord. Go through them to truly understand the cloud. But how can we tie it into our system? Every day, as we do in preparation, every morning and every night, is identify clouds that are in play, right? Some clouds, guys, we don't have to worry about for a while, but it tells us we're strong as shit, right? Gauge that trend. Let's look at a few other examples here. Hourly cloud, right? We know if we break under hourly cloud, it's over. Let's go to the market here actually for a good example. Right, guys, as you hear me talk about, the 4-hour cloud is huge. Huge, huge, huge. If we're above it, right, gauging trend, I know we can continue higher. Whenever we get too far away from it, we typically have to go back and test it. What happens when we test it? It's going to give us a gauge of trend, which then translates into everything else. So here, family, right, we had a test of all-time high and failed. If we broke below this cloud, well, then it was time to retrace. At the time, right, our moving averages were below. So we rejected, we reverted. Not only did we revert, right, let's just mark this little box here, we tested our biggest and one of the most powerful clouds. So now we're asking ourselves, okay, are we going to hold here? We're at liquidity. We made a reversion. We have a trigger level, right? If we break through this, if we hold this cloud, we can start, exploding and pushing higher. And that's exactly what we did, team, right? We held the cloud, we retraced perfectly, we broke a key level, and just absolutely exploded, squeeze after squeeze after squeeze. Flipping to here, we're extended as fuck, right? We catch that drop. Where's the drop to, team? Right to liquidity, right to that 4-hour cloud and held, right? Literally held almost to descent. And then we saw, okay, how do we use this, right? How it ties into our system. We retraced, we're at the cloud. If we break below it, things can get very slippy. If we can't break out of it, right? It gives us context, team. Go watch the cloud video, but you can see we failed to break out of it. So if we break through it, it's going to get messy, and then boom, a huge another dump. And now, team, this week, upcoming, we're going to have to see what happens. Do we hold liquidity, right? Is our moving average zones? Do we push back off POC, hold that all-time high, and start to carve back through the 4-hour cloud? If we don't get back above the 4-hour cloud, team, we can expect to continue to dump. So again, it's just something you want to apply to your trading on top of all your other plans. Just like here, right? We hold hourly cloud most of the time, team. When we break it, it's giving us huge confirmation for a bearish setup. So to apply this to our example that we are building on, we came into this day with a 30-minute squeeze, right? Playbook setup, check. We had our key level. We had our trigger, right? And we had our zone. We had our map. Breaks low a day, we can retrace. Where to? Reversions, right? Why? Because we're extended. Great. We have the map, we have the extensions. ATR got us there, right? 2 ATR got us there. And now, just for a little extra team, we can check out the cloud. So now we know, and this is just stacking edge team. Simple as that. These are all just more and more edge, which will raise your probability. So if we fire 30-minute squeeze, if we break low a day, if we break hourly cloud, this is almost guaranteed, family. So we just fucking cleared all this stuff, guys, and that tells you your trade's most likely going to work, right? If we broke that low a day and bounced this cloud and continue to hold it, well then shit. You know, maybe that squeeze is going to get stopped here, whatever. Maybe we don't retrace today. But the fact that we can add it to our game plan, huge, right? As you guys know, the clouds I like 1 hour, 4 hour, sometimes, 30-minute, just check them all out, right? Even 5-minute team, right, is a good intraday gauge. Right, that morning we slip below it, we try to break out of it and we can't. So not only below the 5-minute cloud, we're breaking our zone, we're breaking our key levels. Where'd that key level go? And we're switching over, right? Where to? To the 4-hour cloud. See what happens from there. You can add any types of clouds, team, right? We had that 30-minute squeeze. Here's more confirmation, right? We have our little 30-minute squeeze here, starts to release in the morning, starts to break that cloud in the morning. Write it open. We open, we stuff it. That's good confirmation, team. And then we start to die, the squeeze releases, we complete ATR, we break our trigger level, and then we retrace. Literally crossing everything off on our complete system. We retraced right to our points, we broke our key levels, we nailed the playbook setup, we hit ATR, we knew what strike to play, we read the tape of key levels, we watched the cloud, and boom. It's one good trade, team. So go watch the cloud to understand it fully if you haven't, and just simply, guys, apply it into the whole system. So let me flip out of here, team, and just wrap it up with a little rant on preparation. So we have our system, right, guys? We know how to trade. And all of these concepts are really, guys, the only things that matter in trading. We understand if they're extended, where they'll revert to. We understand the key levels that are going to cause moves. We understand setups that are going to give us high edge. We understand where things can go, right? Not only through ATR, but through big money leaving clues. We know what to play, so we're not playing shitty strikes. We're playing what the big money's playing, right? You're not going to get manipulated by a market maker in some random ass, strike that has, 10 volume on it. Follow the money, team, right? And then we're reading the tape, we have our targets, and we execute one good trade over and over and over. How do we do that? By daily preparation, family, right? This is our business. And now our business is to run our business, run our system. Every morning, family, we wake up. What do? We run a scan for our top setup, right? Another thing is we check the news. Understand what's driving these things, right, guys? This is how stocks move and why they move, and news is gasoline, right? We get news that's pushing the throttle on the Lambo to drop this shit. So we always check news, guys, right? The economic calendar. We check upgrades, downgrades, anything that adds a catalyst to our setups, right? These are all catalysts, as is news. So part of daily prep, team, is understanding what the hell is going on. Right? This is our weather. Our news is, telling us what's happening. You wake up today and there's bad fucking news and you don't even know it. You're going to get lost. So check the news, team, check the upgrades, check the downgrades. We do all that. Right? So we wake up, we understand what's going on with the news because news drives stocks. Then we understand what's squeezing. Where should our attention be? We also understand, we watch every morning. What strikes got hit yesterday? How close is that? Does it line up with our zones? Right? Does it give me good targets, realistic targets with ATR? Right? So we wake up, we're understanding what's going on, we're checking the news, we're finding our good setups, we're seeing what to play that day, what to expect, And then again, we check, where are we? Are we healthy? Can I expect a push? Should I be getting ready for a drop? Run through this team every morning, every night, and that is really how you build a successful trading career and a business. You don't need anything else, family. Right? I'm obviously going to be biased here, but this is it. This is all you need. Understand what's happening in the market, why, and where it can go. Wait for your great trades, follow the big money, understand what's possible, and crush it. So really hope you enjoyed this video, team. As always, if you need me, ask any questions. But that is it. This wraps up, team, how to tie together all of our core concepts to take one good trade and build an amazing fucking career. Love you guys. Enjoy this video.